What's up, everybody? Pete Kopech here. The Fed just had another meeting, and here's what the end of 2023 and beginning of 2024 could look like. All right, guys, so let's head over to the article. So CNBC just put out an article that the Fed declined to hike interest rates again, but they point to rates staying higher for longer. So, as interest rates rose rapidly this year, I think we were all hopeful, maybe fingers crossed, that the rates would eventually start to come down at some point at the end of this year or maybe early next year. But it's starting to look like that is not going to be the case. Currently, we're in a low 7%, maybe mid 7% interest rate environment when it pertains to mortgages and home buying. And what I think we can, again, start to look ahead to is potentially one more interest rate hike. Now, Fed raising rates doesn't necessarily mean interest rates for mortgages are going to go up, but they have in pretty much this last year. So I think you can pretty much count on them continuing to increase. Now, we had a recent conversation with somebody who was at an open house, and this is a common conversation in this environment where someone is very concerned about buying a home at a higher interest rate and a higher home value, right? Because we've seen over the last several years, home values increase rapidly as well as interest rates to try to slow that down a little bit. So as my screen continues to load here, we see again, we're in about a 7.19 per Freddie Mac. And let's just take a look, right? So I wanted to go back, let's go back 10 years and let's say, okay, well, if we're in about a 7%, when was the last time rates were as high as 7%? And actually, let me just switch to the all data. And that brings us around 2002. So 2002, we're in January of 2002. Interest rates are right close to where we are on the average, 7.14. They have it here at 7.19. So what do we know happened between, in that short time then after? So people who were buying at 7% in 2000s, 2002. Let's take a look at the average sale price from the U.S. Census Bureau report here. So if we were to look in the mid 2000s, now they had been the highest they had ever been to that point. Don't look here, look back here. Right? We've seen home values continue to rise. And then, of course, we saw the rapid appreciation of the mid 2000s, which was then followed by the mid 2000s financial crisis, which caused home values to decline. Now, one thing that is very important, and you may know this, you may not, the reason that home values, and we had a big part of the financial crisis, was because there were faulty loans that were being issued, right? So there were loans being given to people who literally could not afford them from the time they signed the papers. So home values really didn't have much to do with it. They were headed towards foreclosure or losing their home regardless. It just accelerated very quickly. There's a lot of nuances. Some of it I understand, some of it I don't. It can get very detailed. So when we see that home values then took a dip going into 2009, where they, per this report, reached their lowest point on average, let's take a look at where interest rates were. So we know, again, let me move my head over a little bit. So we know we were at about a peak on interest rates. So again, 6.5, we know we were at the high sevens a little bit earlier. And then we get into the mid 2000s, we see them start to dip down below 6, come back up a little bit, but then they ultimately go down and continue to fall until they reach about a 3.3% interest rate. So why is this important to the conversation we're having right now? So again, if somebody is concerned right now about making that move to better their life or start their home ownership, equity position or whatever it is, waiting a year from now, first of all, you might not see much of a change in interest rates. You might not see much of a change in home values, because I think what's concerning too is that for waiting, right, we know that we've seen now interest rates as high as 7.23% as we start to enter the end of 2022, beginning of 2023. But where are we at with home values? They have not wavered a little bit. I mean, we see this little dip here, which to me is a little bit interesting. I'm not really sure. I mean, the only thing I can think is there are just so many less homes. It might have something to do with that. But we are, because I can tell you pretty confidently, the beginning of 2023, there was so much competition on homes. So to see them have the home values kind of starting to declining with higher interest rates, but ultimately that's what the Fed wants. That's what we want. We want higher interest rates to decrease home values. Now, this is a national statistic, so I guess it varies on where you are. Here in the state of New Jersey, we have continued to see all-time high home values. So again, what is the point of all this? The point of all this is that if you're going to decide to wait, and interest rates, with rising interest rates, home values really haven't wavered, at least where we are in the state of New Jersey. Waiting for interest rates to drop, you're going to see home values start to increase, right? So although it may not be, although it's concerning financially, I think the thing to understand is people don't move for the most part for financial reasons, right? People move for personal reasons. You had an addition to your family, you had a loss in your family, empty nesters, smaller home, time to downsize, time to increase, change of job, change of life. Those are things that we should not hold off on waiting simply because we're afraid that the home values are going to decrease or the interest rates are going to decrease. If interest rates decrease, we're going to see an increase in home values. And if we reach a financial issue or maybe we start to see something change and now we need to have more spending, we know that the Fed is going to decrease interest rates, which is going to then allow you to refinance into a lower payment. So it's very important to buy, obviously, within where you can afford on a monthly basis. You can still meet your needs for your family, for yourself. But I think waiting could be a mistake. Inventory isn't going up anytime soon. We're so far behind on building. It's just, again, the point of this is just to give you a little bit of perspective, right? For that person who's saying, well, I'm not going to go into a bidding war. I'm not going to pay these high interest rates and these high home values. Well, you might be waiting for a very long time, right? People ask, when is the best time to buy and sell in real estate? And the reality is it's when it's best for you, right? So I hope these things are helpful. I hope this gives a little bit of a different perspective. I know you've heard everything from marry the house, date the rate to, all kinds of things. This is a little bit about what we mean by that, right? Interest rates can always move. But once you're locked into a monthly payment, you're locked into a monthly payment, right? Taxes go up, insurance go up, sure. But interest rates, what if they go up over the next 6 months or 12 months? You could be in a worse financial position than you are now. Don't wait to change and improve your life based on what the market is doing and based on what the interest rates are doing. Let's have a discussion. Give me a call. I'd be happy to walk through your personal situation and see if now could be the right time. And if it's not, then we put together a plan to get you there. So again, Pete Kopech with Keller Williams. I hope you guys are having an amazing day. I hope this is helpful for you. And if there's anything I can do to help, just give us a call.